MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, what's going on? What's going on? How everybody doing? Got a nice little calm Friday morning. We had some pre-market, economic news, PCE report. That was a brief response, but nothing really happened. Nothing much came from that. I'm gonna be able to organize my words. I was actually considering, taking this morning light. Had a, really good week. We'll see how things unfold. Have no reason to, really push it this morning. And we are open. Make sure I got everything checked off on my pre-market checklist. Things looking good, looking great. All right, let's get into it. For NQ, now between the indices, there's a little variance between the different indices. I know our YM was ranging out a little bit more towards the highs than the other ones, then the rest of the indices. But then RTY was looking a bit, like they were ready to find some cheaper inventory. So just an awareness. Right now, NQ has started to lift the previous supply, coming back into the session high, but we just had a spike into the session high off that 8:30 news. Currently picked up the last inventory off the VWAP, but we also have some MSRP and automation. Let me make sure I'm ready to take advantage if I see my setup. Last quick inventory off of PR+1. Did quickly pick up some inventory off of 1270, making a new high. Got a little bit of momentum to start today's session off. It's looking really strong off how the 3-minute is trading so far. It's like we're coming back into that inventory. So far, that's turning into a look above and fail. But we may not be out of this new highs yet. Now we just came back and picked up some inventory off of 1275. So we're being our buyers are really putting on the pressure here. It's also another low volume day, well, relatively normal, but we just now crossed the 100K mark. previous inventory was just lifted towards this near this 1280 area.
Order filled.
There's a retest of that inventory, that quick inventory zone. Stalling out a bit.
Order filled.
Currently looking at our supply above 1290. Now we're just doing some negotiating. It was a quick mechanical response off of automation. Let's see if we can get another lift off of automation. Be nice to catch a runner here off of automation. But we're still negotiating, still working the budget. Back into our supply zone. There was a supply response. Now we're negotiating at higher prices. Let's see if we do. There's a lift of the supply. Looking to see if we come back inside or do we continue to lift supply. Immediate supply response off of PR plus 3. Not ready to really just take off quite yet. If we even do, I mean that opening 6-minute action is enough to excite some buyers, but let's see if that doesn't mean they have to actually
Order filled.
Back to that inventory below 1280. Looks like we're trying to break through our automation.
Order filled.
That's 1270. We are picking up some inventory down here at the low of this automation zone. Drop of the inventory, a slight drop of the inventory. We come back inside of that range. Still negotiating here. Haven't made a deal yet. There we go. Pretty decent inventory response. See if we can make it back up to the session high. Got a supply response up here. There's a push of the supply. And we broke through that PR plus 3 area. Still getting a supply response. We made a new session high, but it wasn't that strong. I went ahead and took my profits. I think that's gonna be the last one for me today. Nice and easy. Came in, made my little bread, made a little pocket change. Actually, that was a decent first 10 minutes. I did kind of tell myself that I was gonna take it light today, but so now we back into automation. The automation zone has closed up a little bit, and we're finding inventory again off of automation, that 1285 zone. And I'm just gonna say the price, because every time I mention the price, I'm referring to it as a range or as a zone. I'm not being specific to a number. I'm just using that number as a reference. So right now we got inventory off of that 1285. I can honestly see, like earlier I used the term make a deal, which just means that when the deal is made, then price is actually going to trend and stop doing this little up and down thing, stop negotiating, stop just hanging around in a tight zone. So I can actually see them making a deal in either direction. At this point, right now it's up in the air. I wouldn't be surprised either way. We're still picking up inventory. Now we dropped it's the same area, that 1285 to 1280. Surprise. Supply is around the whole number of 100. We're just hovering our overnight session high. A lot of budgeting going on here. Some negotiating. Back into our supply. One thing I've been noticing lately is, see how I want to, which I got two different ways I want to express this. I think the topic of fear has come up a lot in terms of being different forms of fear. There's different forms of fear related to trading. And one thing that I've noticed is that the more you lose and you get past it, the more I've lost and moved past the loss and learned by taking my lessons from the loss, the more that actually has helped me mitigate the emotions that I had with trading. Right, like now, one thing that I do believe in is celebrating your wins. So if you have a successful day. And by successful day, I don't mean how much money you made. I mean that you had a plan, you had your strategy, and you stuck to your plan and your strategy. If you did that well, right? My goal is to do that as perfectly as I possibly can. To do it with, do that with perfection. So if I have a day like that, that's a win for me. No matter if I'm green or red, no matter if that made me green, if I made money that day or if I lost money that day, as long as I follow my plan and I stuck to the strategy, that's a win for me. And I will allow myself to feel some excitement. I don't go too overboard with it, but I do allow myself to feel some excitement when I have a successful day where I was able to stick to my plan, right? Trade my strategy consistently and be disciplined the way that I'm supposed to be, right? So I do believe in that, but I've come to this point to where I'm like neutral in all of that. I've been working on becoming neutral and, in a lot of ways, which is, bled over into my trading. So now if I have a good day, it's just, okay, it's just a good day. If I have a quote unquote bad day, then okay, it's just, I made these mistakes here. All right, lesson learned. Let me put that in my journal, what lessons I learned. If I had some technical issues, let me go ahead and note that in my journal and keep it moving. Like I've got to a point where I've allowed myself to experience the losses, because a lot of times I'm even saying like that's kind of important to, I think it needs to be stated more about how beneficial it is to experience losses, where you have a lot of people on the internet that tries to, usually they have something to sell, but they're preaching to not take losses, basically. Or they're trying to, sell the quote unquote perfect strategy to you, or tell you how you're trading wrong, blah, 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 right? But taking losses, one thing that I've heard a lot is, a good trader knows how to lose. Like some I'm kind of paraphrasing, but trading well basically means to be able to lose well. I re-quoted that horribly, but I didn't get the point. But when you're coming into this, when you're new to this environment, when you're finding your place in this arena, taking losses is going to be beneficial to your growth. And one, you can't avoid the losses. And by the kind of losses that I'm talking about, it's not just taking the loss and as your everyday. I mean, like making mistakes and having, experiencing drawdown and experiencing blowing out accounts and stuff like that. That's the kind of losses that I'm really talking about. It's not necessarily that you have to avoid those things. I would say you should experience those things, because there's a lot of lessons in those. Not on purpose, just as a natural, sequence of events. It helps to explore those things, get the lessons, and then that'll help you get through the lessons, and that'll help you become better as you gain more experience. And then you'll get to a point to where if you started out being emotional with your trades, a lot of times that emotions that comes from, fear of the unknown. So now you know what it's like to blow out an account, and you made it through it. You kept it moving. You realized that it wasn't the end of the world. It wasn't as bad as everybody makes it out to be. And so from there you can grow, and now you're not as emotional anymore, because you already know what that is. If I blow out this account, I can try again. I take the lessons from it, and then I can try again. If I have a big red day, well, I can make it back, because yeah, that's today. Maybe I lost $3,000 or $4,000 today, $8,000 today. But over the long run, I'm trying to make 6 figures plus. So this 8,000 is really nothing. Let me find whatever lessons I can take from this $8,000 loss. Make any adjustments that I may need to make. Usually that adjustment is something to the individual trader, like being more patient and actually waiting for your setups. It's usually not something with your strategy or something that the market did. It's usually the trader themselves that needs to make the adjustment, make that correction, and then you just keep it moving. I actually see that question a lot of how to get over the fear around trading. And really, the way that I see to get over the fear of trading, the fear of losing, is to actually lose and to have those experiences and go through those experiences. So now it's not unknown to you anymore. You have knowledge of that experience. So there's no more need. You don't have to be fearful of it anymore. And you should be building confidence around those experiences. Yeah, that's something that just hit me as I'm watching this being done with my trading session. So we did get some quick inventory. They finally made a deal, and we finally saw a nice little run up here. We broke above PR plus 4. Made our way to find some supply around 140. Picked up some quick inventory in this 125 area. I got about 8 minutes before halftime, so that means we are 10 minutes before B4. So I did start the stream a couple minutes early. Need to make a mental note to clip that little area out right there. One thing I need to be more consistent with is I've been planning to make some short form, like break these little nuggets that I put in these live streams, and use it for some short form content and some other stuff I'm supposed to be doing. But I had a little distraction over the last couple of weeks. But the main thing that I'm working on now is just locking into things outside of actually trading that I plan to do. So I got a lot more coming down the pipeline to be on the lookout for. So we did lift inventory one more time at PR plus 5. That 131, let's call it 133 zone. It's been a while since we visited automation. So there's the automation. Finally tapped back into automation. Inventory response off of automation. Mechanically. I could look at this in hindsight and say it would have been nice for me to keep trading, but I'm actually good. Like, again, that's about making a plan and sticking to it. Number one, right? Also, not letting greed set in. It's a common thing to have a good day, and if you keep trading, you want to. So there's a balance to this. Like having a good day, having a good start, and you catch some nice winners at the beginning of your session. but then you keep trading and you end up giving half of it back or all of it back. So that's that side of it. But then you can keep trading, you can keep growing it. So like today, just today, I could have kept trading, and even though I didn't get a whole lot of triggers, I got maybe 1 or 2 more triggers, but I could have kept trading and increased my, well, you know, my grew the P&L. But there's also been days where I had a nice start and I could have kept trading, or I kept trading. I've had it both ways. I could have kept trading and I, you know, could have gave it back. So, you know, it could be actually beneficial to develop a plan, or like a plan B, for the times that you do want to keep trading after you've already had a nice start, to where you can maybe size down, right? Or tighten your stop. Like, so on the days like today, like, okay, normally, let's just say hypothetically, just throwing a hypothetical out there. Let's just say normally I have a 30-point stop, right? Okay, I'm gonna say it one more. Like I said, I'm not gonna do the disclaimers anymore, but I'm gonna make sure on this one, I'm gonna say that this is a hypothetical, right? As a disclaimer. Actually, for NQ, I wouldn't recommend having a 30-point stop. If you went 30 points against where you found it reasonable to get in, it could be an indication that you've already begun the rotation. But anyway, so let's just say, hypothetically, I have a 30-point stop normally, but then I have a good start to my session, and then I make, you know, let's say I have 3 winners back to back. Then I can have a plan B inside of my plan, to where after that 3rd winner, then I scale it back, and then let's just say now I go with a 10-point stop. So that way I don't have to have a full loss if, you know, when I eventually do, when the strategy eventually doesn't work. Because your strategy, I don't care how good of a strategy. I've tried a lot of strategies, I've seen a lot of strategies, and I haven't seen one strategy that works every single time. You know, even with, I've seen a lot of people that has a strategy that gives them a high win rate. And I've had one that it was like 90+%, but it still wasn't 100%. So that percentage, that small percentage to where it can be you can lose, can be really significant, especially with those strategies that gives you a high win rate. So, you know, it helps to make sure that you're actually giving the appropriate attention to your risk management, and you're not overdoing it on the risk side of the game. You know, and that's where that plan B comes in. It's helpful where you're up, like I said, to kind of summarize, you're up on the day. You've had maybe, you know, 2 or 3 or 4 winners back to back. You want to keep trading because you still have time in your window. So you can just scale back how much you're willing to risk, and then when you do take that inevitable loss, you only lost a portion of what you made. Now, of course, that's a lot of that's going to depend on risk to reward ratio. So if I got a 30-point loss, if I got a 30-point stop loss, but I'm only taking 5 points every time I take a winner, then even that 10-point stop loss is going to be significant. And, you know, it's just some math that you have to work out when you're doing your back testing and all that stuff. All right, so we're coming into halftime. We're going to take a quick break, and we'll be back for another episode of Trader Triggers. I almost had sort of a Trader Triggers for this first half. Let's go into halftime. We'll be right back. MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right. Welcome back to the second half of Futures Trade Radio for another episode of Trader Triggers. So when I started my trading journey, I began like most other, new traders do. I started out trading stocks. This was going pretty well. I won some, I lost some. I didn't make a ton of money during this period, but I was learning a lot, right? Actually, I don't think I actually made too much money. I think I pretty much ended the last trade I made on a stock. Overall, I think I pretty much ended up flat, right? But one thing that I wasn't too crazy about was the need to scan every single day for the stocks that were worth trading. And to be honest, I wasn't that good at it anyway. I would look in a lot of different places to find stocks to trade, but it just seems like I really couldn't find the good ones that were worth, or that would give me the good opportunities that I was looking for every day. Right? So many of the stocks that came up during my pre-market scans ended up not moving enough after the market had opened. And after I, because I was giving myself like the first 10 minutes to not trade, they didn't give me enough movement to reasonably trade with the strategy that I was using at the time. And the ones that did move, I would typically miss the move that I could take advantage of with my strategy, which led me to doing things like chasing and executing off of FOMO, all the things that we're not supposed to be doing, right? But that was, like I said, it was going pretty good. But kind of life just took me in a direction to where I needed to kind of shift, and I wasn't going to be able to keep day trading stocks. And I ended up reading this book called Mastering the Trade that introduced me to the futures market, which solved that main problem that I was having of needing to scan for something to trade every day, which allowed me to build a tiny watch list that made it easier for me to find trading opportunities every day. That was my initial feelings about trading futures, and why I have never looked back ever since I started trading futures. But there are some other valuable reasons I believe trading futures is one of the best ways to start in this business. And so that's what we're talking about today, is why I think futures could be a better approach to starting out day trading, even really just trading in general versus stocks or something else. And it almost makes me wonder why so many people are still not privy to the futures market. Like, you hear everybody talking about stocks. Options blew up since 2020. Like, everybody name other trades options now. Like, I had coworkers that were talking to me about trading options. But also with me starting my education on this environment of how to trade, I started out learning about how to trade from the perspective of risk management. I'm also puzzled to hear so many non-traders mention how risky futures trading is. Or especially when I decided I was going to really just lean all the way into futures trading and make it my thing. A coworker that I worked with at the time, they were talking to me about how risky it was and to be careful and all this stuff. Like, the risk of trading futures was astronomically greater than any other financial asset. So at this point, I understand a bit more to where this belief comes from, which is kind of odd to me with all the access to information on the internet that people still trade without proper risk management. But the point I'm trying to deliver here is why I think the futures market is one of the best markets for new traders. If you can figure out how to trade one futures product with consistent results, I honestly believe you can trade just about anything. So in this talk right here, I'm going to go over some reasons why I think futures is better than other markets for new traders. Now, let me go ahead and just say this out the gate that I use the term there, I think, because this is just my opinion. If you see it another way, that's great. It's what you think is what really matters, but I'm just giving you some other ideas to consider based off of my idea that futures could be a better approach for new traders when they're getting started in this business. So one thing that I'm going to start with is, I think, again, I like to start with the most important, which the futures market, trading in the futures, depending on how you do it, of course, it allows you to focus on what's most important, and that's you, the trader. It allows you to focus on your skills and really, put time and energy into your skills and gaining experience without a whole lot of, a bunch of extra noise that's going to cloud your vision of this environment. And it's going to kind of be a barrier to how you're able to grow, or how fast you're able to grow as you gain more experience and you participate more as a day trader. So, there could be a lot of layers to trading equities, especially if you're trying to trade options on equities, that, in my opinion, makes trading more complicated than it has to be for a majority of the people when they are trying to just get started in this business. Like, it helps to understand the Greeks, and then it can help to, understand the volatility and how many people actually trade in the contract at the premium price that you're trying to trade it. Like, there's a lot of layers to actually trading futures, and then there's a lot of different strategies that you can apply to trading futures, to trading options, depending on how you're trying to trade it. Unlike futures, where it's just, do you think price is going to go up or is it going to go down? And it's straightforward. The only other things you have to consider is margin requirements, and to make sure you're on the right contract month, and like little stuff like that. But those things are easy to figure out, and there's plenty of resources on the internet. One of those resources being the Ultimate Trader's Guide, which I have a lot of resources and information about the futures market and the way that I approach the futures market. And then it also, you have to understand the tick value, right? Which is going to give you the point value, so that that will help you build your risk management plan, so that you're not, you can develop your strategy around that, and you're not putting too much risk on the table. You're not letting these trades run too far away from you from lack of understanding the value that every time of every move or every tick that a futures price trades at or changes. And like I mentioned earlier, trying to find what to trade is a whole task in and of itself. Like, you can find things to trade. It's easy to find stocks, but to find the good stocks that are going to match your strategy and your level of experience and your capital, the amount of capital that you have to trade with, that's when it gets complicated. And it can easily fool the inexperienced trader into thinking that the problem is the market not giving enough of fair opportunities, when in fact the trader just hasn't developed the necessary skills, experience, or the mental fortitude to be consistent in this complex environment. I can kind of relate it to working in the information technology field, right? The IT field. Right? I can handle brand new tech, all the books and all the articles and all the resources on how computers work and how they communicate with each other securely over wired and wireless mediums across varying topologies with unnoticeable degradation. Even the way I worded that probably sounded like a foreign language to anyone that hasn't at a minimum studied this field. But I promise you what I just said there, I didn't just throw words together, some random words together to try to sound smart. That actually meant something. That was actually a pretty decent summary of how information is shared across the technology that we have today. But giving the new tech all of that knowledge and the tools to be successful doesn't mean that they are going to be able to put a corporate network together by themselves or even be a valuable member of a team of engineers. The new trader would be better off focusing on one portion of the IT field, build their skills and gain experience that will allow them to transition to other branches of this or other areas of the IT world more efficiently and be more valuable in the IT industry. And I see the same as being true for someone that's new to these financial markets. There are plenty of futures products that can be traded every single day depending on your strategy. And the beauty of this is you can just pick one thing that you want to trade and you can stick to that one thing until you figure out how to be a good, consistently profitable trader, whatever that means to you. And then once you're good at that, now you can start looking at other products and other areas to apply the skills and experience and the knowledge that you have. And most importantly, just focusing on one thing is going to allow you to really hone in to your psychology to where you're not getting emotionally triggered like a majority of the market and being taken advantage of because your focus, your attention is all over the place instead of you trading on you trading like one futures product or one product, and you can focus on that gives you the opportunity to just focus on your emotions and your psychology, so you don't become vulnerable to all the manipulation that goes on in this environment. So what trading, with the futures market, what it also does is it allows you to trade with less capital than you would need to be able to day trade with stocks. Because with stocks you have the PDT rule, so with futures you get around that PDT rule because the PDT rule doesn't apply to the futures market. Now there also is the options market. You can also get around the PDT with options and forex, and there's no PDT for cryptocurrency. But like I said, I believe that the futures market is less complicated than those other markets. And it's easy to focus on one thing while at the same time allowing you to maximize a low amount of capital to get started trading with. Now, speaking of low capital, I would recommend no less than like $500 if you're going to trade futures, no matter what futures product you're trading. Technically, you can get away with less with the low margin requirements that a lot of these brokers offer, these cheap brokers offer. They're really trying to get your trades for the commissions, but you can get away with less, but I would recommend no less than $500 to start with. Let's just say that you're day trading micros. And they even have like more products that they recently came out with, like the forex, which really, in my opinion, from what I've seen, hasn't really taken off that much like they initially, wanted it to. But getting back to the point, the futures market for new traders, it allows you to put less risk on the table by actually starting with less capital. And let's say that you have 30,000 to trade with. Now, if you're trying to day trade with stocks, you're gonna have to actually put all of that in an account just to give yourself a buffer so you don't go under that $25,000 PDT rule threshold. But if you're starting out with the futures market and you want to maximize that 30,000, you can start an account with $1,000. Try to get good with that 1,000. You mess it up, you blow it out, cool. You got 29 more thousand to keep, and you keep trying until you can make that $1,000 work. And if you can't make $1,000 work, you're still gonna have a challenge making $30,000 work. So you might as well maximize that capital. Try to start with 1,000, get that 1,000 to work, figure out how to be successful with that 1,000. If you can make that 1,000 to work, if you can be successful with that $1,000, then imagine what you can do with $30,000. Keeping now the key to that is keeping the same approach and the same risk management technique that you use with that 1,000, but you're not really trying to go for bigger trades or anything like that. You're just pretty much doing the same thing. You're just using more contracts, or maybe you're going from the micros to the E-minis, but you're not changing the thing other than maybe your position size. Now, if you psychologically you think that, oh, I can do more now, I can go for the bigger home runs now that I got 30,000, I got a lot that I can risk, you're probably going to end up messing that up anyway. So this is why I say to focus on one thing. Get yourself, the trader, together first with as low as capital as you possibly can. And then once you get good there, now you can take the other capital that you have access to, and then you can 10x it, or you can multiply it as much as you want to. Now, another thing that I see futures being a benefit over stocks is there's usually less slippage. Now, on this topic, what's interesting is about a couple days ago, I read on someone's post on Reddit that claimed that after they moved over to futures from stocks or from trading equities, that they had more slippage, or they experienced more slippage with futures than they did with stocks. And I find that interesting because I never experienced this for myself personally, and it kind of could have something to do with the broker that they are using, which that broker, or the order routing that they have with that broker, may not be the most efficient. So unlike a T-ton who has really good order routing, and you don't see really any real slippage at all. And the reason why you usually have much less slippage with futures versus stocks is because stocks typically have wider spreads, especially when things get volatile. Now, in this, going back to this Reddit post, they didn't really mention what stocks they had traded before. So they didn't give a lot of details, so the context was heavily missing. But like I said, from my own experience trading both, having traded both stocks, and now that I trade futures, and I've also traded options, the only thing I haven't really touched is forex. But amongst all of those things, I've had way more slippage elsewhere than I've had with trading futures, any futures product. And I've traded CL before, the crude oil futures products before, and it can get crazy over there if you get caught in the wrong, in the wrong cycle of what CL does, or if you get caught in crude oil inventories. If you get caught trading through crude oil inventories and you're not prepared for it, it can get pretty wild over there. But still, even with that, I've had the less slippage using market orders. Even now, I use limit orders mostly, but even using market orders, I've had less slippage than any other thing that I've ever traded, especially stocks and options. So like the typical slippage that I've experienced with NQ has been maybe 5 ticks at the most on the most volatile days. And many times, if price is really moving using limit orders, sometimes my limit orders will just not fill, and I will end up having to cancel the trade. So using limit orders is my recommendation for avoiding crazy slippage. You're still gonna get slippage, but you're not gonna get that much slippage. Because just because you put a limit order in doesn't mean you're gonna get the exact price that you wanted. You could get a slippage of a couple ticks. And like I said before, it also has a lot to do with your broker and order routing. So like with Sierra chart, if you're trading on Sierra chart, T-ton handles orders much more efficiently even than Rhythmic and CQG as of right now. And they're still new. But Teton handles those orders much more efficiently, so you're less likely to see much slippage. And also on this topic, it is believed that the bid and ask spread could have a significant effect on the potential or the profit potential for trading futures. Now, I kind of browsed over the bid and ask spread a little bit earlier. However, the impact on these spreads is much easier to see when you're trading stocks. Equities traders are constantly warned to pay attention to the spread because the difference in the spread can be the difference between slippage of 50 cents, for example, versus on a wide spread versus 5-cent slippage on tight spreads. And futures in general do not experience the same spread volatility as stocks. Futures even has the advantage over forex in the spread arena, as the spread is added to the cost of taking a trade in forex. For example, if you take a trade on a forex pair and close it for 1 pip profit, your net profit is going to be 1 pip minus the spread, broker commissions, and any other fees the broker wants to tack on depending on certain factors like how long you've held the position, such as like swaps or storage fees and custodial fees. Now, I haven't actually traded forex firsthand like I already mentioned, but doing some research on them, apparently these fees varies from broker to broker. But what you always have is the spread fee that's put on top of broker commissions at a minimum. But with futures, this doesn't apply with futures. Maybe unless you're like trading with some kind of shady broker. But if you take a trade on NQ, for example, kind of taking the same concept as our forex example, and you close it with 1 tick profit, your net profit is going to be 1 tick minus the exchange fees and broker commissions, which are like pennies. You add them up, then it's a couple dollars. But if you get the right broker, or it could be less than $1 depending on the broker that you have round trip. But those fees are always going to be the same until they change the fees or the commissions across the board for everybody, just based off of whatever the market is doing in that moment. Like this year, I believe the exchange, they raised some of their fees a couple pennies, right? They raised it like 5 cents. But you're not going to be charged an additional fee for the spread like you would in, let's say, forex, or it's also factored into options. The spread is it could just have an effect on how much slippage you can have. But like I said, I personally haven't seen that to be relevant enough to give it enough energy to really just put a lot of focus into it. And I've been trading through several cycles of as a futures trader over several years. So the last thing I kind of wanted to cover here is liquidity when we're comparing trading stocks versus trading the futures market. Like I said, one of the things I really don't like about trading stocks is the scanning for something to trade every day in search for a ticker that has enough liquidity to avoiding getting stuck too long, holding the bag. This is a problem that I never had with trading futures. So if you don't find the right stock that has enough of liquidity to handle all the shares that you're trying to trade, I've seen it to where other traders, now I kind of didn't have this experience for myself when I only traded stocks for like 2 months. But it wasn't too difficult for me and I was only trading like 500 to 1,000 shares at a time. So I picked stocks that it wasn't too difficult for me to get all my orders filled, but I have seen other traders who are trading with more shares, and they can get stuck in a position because there's not enough liquidity to fulfill all the shares that they're trying to, execute with. Right, so with futures, we don't have this problem unless maybe you're trying to trade with thousands of contracts at once. But other than that, most retail traders are not trying to trade that much size because the margin requirements, that's going to be super expensive to try to trade with that many futures contracts, no matter what you're trading. But with futures, you shouldn't have any problems at all. I haven't had any problems at all with getting in and out of trades. Especially when I use market orders. Now I can place a limit order and tap that, the price of my limit order real quick, and I may not get filled right away. But if, let's say for whatever reason I need to just bail on that trade, usually I can just wait and it'll go back to and hit my limit order like in a couple seconds. But if I just have to bail on that trade and I hit a market order, I'm going to get out like almost immediately. And that's in every popular trading hour of each futures session, each day that the futures market is open. I've traded it all throughout when there was much less. So I used to trade all day pretty much back when there was much less participation than there is now. But I never, no matter what time of the day I traded, I never had a problem getting in and out of a trade, especially with a market order. So these are just some reasons why I believe starting with futures can be more beneficial for day trading when you're starting out than any other market. Now I talk mostly about stocks here. I did kind of mention options a little bit in forex, but you also have the crypto market, right? You have cryptocurrency, and then there's other markets out there that allows for day trading. But in my opinion, from my experience, these are just my opinion, of course. Like I went ahead and I alluded to at the beginning of this, or like I stated at the beginning of this. This is just my opinion. But in my opinion, I think that for new traders starting out, the futures market could be the best bet. Now, everyone has their own approach to the best way to do what they do. But if me sharing my opinion here, if that resonates with you, right? I'm just sharing it. So if it resonates with you, then that gives you a specific direction to begin your journey. So everybody that has experience, let me know what you think in the comments. Do you trade futures? I mean, if you trade futures, did you start with the futures market or did you start with another market? And if you started with another market, do you find futures to be a more straightforward approach? Now, on that note, I appreciate each and every one of you for tapping into another episode of Futures Trade Radio, or Trader Triggers. And I hope you have a good rest of your day, a good rest of your session. And until the next one, trade it easy.